Is it time to buy this momentum stock right now? Well, if you've watched any of my other videos, you probably already know the answer to this question just by looking at this one screen. However, I'm going to go through it with you and tell you when you should be looking to buy this. So, as you can guess by my words, this is not the right time to buy it. We do want to go through it though and talk about it. It's a good stock. Looking at LULU, it's got a good trend here. It's stayed in a good trend for pretty much all year. It had some down back here and had a couple of good pullbacks through here, but overall you've got a trend. What you see that I've drawn on here, these two dotted lines, these are actually weekly trend lines. I'm going to switch to the weekly chart just to let you look at that. I'm looking for at least 3 touches for me to draw a weekly trend line. It's not as clear on this chart because of the Bollinger Bands, but so I usually draw it on a little bit cleaner chart so I can see everything better. But you can see even on the weekly chart, you've got this good trend. You had a good uptrend here. It kind of fell apart back in this area at the end of the year. And then since then, it's really been on a weekly basis in a good trending area. And weekly time frame is a good place to look for swing trades, especially if you can stand the higher risk, because you're going to have your stops are going to be further down and your target's going to be a little bit higher up. But it can be a good area to do swing trades as opposed to a daily. And just a lot of people are not comfortable with the risk. I do like to swing trade and to probability trade based on weekly charts. But again, it does have more risk, so I understand why people would prefer to stay with a daily chart. Let's take a look at the daily chart. Let's see what's going on here with the Bollinger Bands. First of all, this is our mean line, so this is where we like to see the stock pull back to for a buy. This is our 1 ATR, 2 ATR, and 3 ATR deviations. We've just come off this 2 ATR deviation and moved back toward the 1 ATR. You could make an argument that right here as it approached this 1 ATR, you could have got in an aggressive buy order here. That you can. This is, once you get below this 1 ATR on this uptrend, technically that is a buy zone. I will normally look and see how it has behaved in the past when it hit that zone, and also look at my other indicators to see what they're telling me. As I look at LULU though, I don't really like the way it has respected the 1 ATR. It hugged it through here pretty well, but even at that, you did get below it for a better buy area. I would much rather see it come back to the mean on this chart to look for a buy. I do expect more upward momentum, barring some sort of change that might happen in the world. But I couldn't buy it here at the 52-week high. There's just no way to buy here. I think there's way too much risk. You've also got momentum still building up here, and I would like to see that release some, like with these darker bars down here, showing the momentum is coming out of it a little bit. It's starting to pull back before I look for a buy. Trying to buy as these at the top of these bars as they built, that's another indicator that you're in a bad buy area, which would have been right here. It'd been same as trying to buy right through here, and you see what happened is it pulled back. Right here, it had already started to pull back, but it pulled back even more. So I don't like to build as these bars are going up. Now right through here, it would have worked for you, but this is more the exception than the rule. This is an area where you could have bought on this 1 ATR pullback after a big move up, and even though the bars didn't really support it, it did move up some more, but that's more the exception than the rule. And my trading is based on what's the most probable thing to happen. Then I design my trades around that, whether I'm going long or more likely doing some sort of options trade. Let's take a look at the other indicator. This is my wave indicator, and really it's showing you the exact same thing that on this particular indicator that you saw in the Bollinger Bands. It's a little bit cleaner, so you can see it. Now this is a 2 ATR Keltner channel, and I'm still into this Keltner channel. I'd much rather see it pull back into this wave area for a buy. Even back in here, if you had, I don't like this candle, but if you had, and then after this candle came out, it really just churned down. So I probably would have been looking for, this candle here for a potential long, or maybe a break above this for a potential long, come back up out of the wave. Mainly because this is a bad candle, but here you had a gap down into the wave, so anywhere in here would have been a good buy. Probably I would have went long above the wave, but anywhere in here would have been a good buy here. This one kind of faked us out a little bit. My stop would have been, if I had have entered on this candle, which is a potential entry area, I would have gotten stopped out at this 2 ATR band. And here I may or may not would have entered here. I'd had to check and see what the other indicators look like. I would not have entered on this candle, but if I had entered here, I'd have got stopped here. So you can see it's not always perfect, and no trading system is, but what we're looking for is the highest probability area that we can enter into the trade. And that's the key. And I look at all three of my charts to look at that. Let's take a look at the final chart, and this is my moving average chart. And it's also showing that it's extended, no surprise, right? You can see the moving averages are moving away from each other, especially the 10 EMA is moving away from the 20 and the 30. Yeah, you've got good support here at this trend line still. You did not get really great support at the 50, so that's something to pay attention to later, that it did break below it and stay below it. Here, this candle was a very sharp move down, and it did climb back above it and use it for support. So it did have some reaction. You got good reaction from it here, good reaction from it here. But as I'm looking at the 50, this concerns me. There was more of a downtrend back here, so I'm not going to worry about that. This break concerned me just because it broke it so easily, even though it did eventually come back and find support. The 200s has not really been tested, since it crossed back here. It pierced it, here on earnings, and you just have to kind of let things sort out after an earnings event like that. But it pierced it here through earnings, and then it came back and started to turn higher again. Certainly, if I were to see another piercing like this, and I gave it time for all this to sort itself out, I may not have gone long here, but I certainly would have been looking after this candle. I certainly have been looking for a chance to go long somewhere through here. Might have even got long right here as it crossed it again. So I'll see something like that develop. That's something I would look at. But LULU is a good momentum stock. It is a buy, but not a buy today. You do not want to buy when it's extended so much, and it's easier to see on the Bollingers to me. But you do not want to buy when it's extended so much like this, and when it's going up like this on these bars and showing so much more momentum going toward that upside. That's not a good place to get in. Your chances of being successful are a lot lower. Yes, like in here, I should comment right in here. It pushed up a little bit more, but again, it's got to pull back. It's got to relieve this somewhere. This has got to find relief somewhere. So RSI also is another thing I would look at. It's not a primary indicator I use, but I do let it help me stay out of going long when it's overbought, or going short when it's overshort. And you can clearly see that it's overbought right here. Right now, my expectation, if you wanted to enter some sort of trade on LULU for some reason today, I would probably recommend some sort of short type position, like a debit put spread, or possibly a credit put spread, or buying a put or something like that. You could short it, but this is a pretty expensive stock, so you might not want to do that. Options give you a better return on risk and return on investment. Because I really would think, you're going back into these areas where it did stay at this 52 area. One reason I suggested a credit spread is because if you look through here when it hit the 52 week, when it hit the high here and the RSI was at a high, it consolidated some. And if you had a short-term 7 to 14 day put credit spread, it's very probable you still would have made money through here, even though it didn't really pull back a lot. It consolidated, and then it pushed up again, which it can do. It was right here. It was overbought. It got very little relief, and it's pushing up again, which is the same thing it did through here. Eventually, yes, you will get a release, but it's hard to predict when that's going to happen. So if you do elect to buy puts or do a debit spread, you're going to want to give yourself a little time. Don't do a short-term one. If you're buying options, you want to get at least 30 days, if not 60. If you're selling options, the shorter the time, the better. If I'm selling a credit spread on something like this, if I could get it, in the 7 to 14 day range, that would be awesome. If I'm going further away, like an Iron Condor or something, I might look for a 30 to 45 day. But you know, that just depends on what kind of trade you're wanting to put in. But I certainly would not just go along here. Yes, it could continue up like it did here. That could happen, but that's a lower probability trade, especially with RSI so high. So, you know, I would wait for a pullback and then go long. If you feel you have to do something, I would look for some sort of short, whether it's buying a put or a put debit spread or put credit spread, or I'm sorry, a call credit spread. I said put credit spread. You'd actually want to do a call credit spread, not a put credit spread. So, you know, you do a call credit spread up through here. You could do something like that. But if you like the video, please like and subscribe. Let me know what kind of videos you want to see in the future, and I'll talk to you next time.